The Morgan Report with David Morgan.
Welcome, everyone. This is David Morgan with the weekly perspective for the week ending 14 February 2020. Well, I can't get away from this news. It's everywhere. And so I will speak about the COVID-19 coronavirus. This is from Reuters, and I'm going to mainly focus on the economic impact, not the medical side. Bankers in Asia are bracing for a deal drought as efforts limit the spread of coronavirus epidemic have put key meetings and road shows on hold. Several auctions of assets are facing delays or reassessments, and preparations for potential Chinese initial public offerings are also slowing, bankers said. That's really all I have to say. It's not a very long article, and obviously lots of impacts to the economy. And what really is the big question, at least for me, is how big of a pandemic is this really? What's it going to look like a month from now or 2 months from now? Is it going to be pretty much blown through and over, or is it going to continue to escalate? And I don't think anyone knows for certain those answers, but my guess is that it is going to continue to escalate at least for a month or two, if not longer. I don't know. Which means it's going to touch more and more people, which means more and more business activity is going to be put under strain. And Wolf Richter writes, coronavirus fears sink world's biggest mobile trade fair after the U.S. and global tech giants pull out. With Facebook, Intel, Cisco, Sprint, Amazon, Sony, Ericsson, Nokia, and on, the novel coronavirus, now named COVID-19, claimed a fresh victim outside of China. The world's biggest mobile trade fair, the Mobile World Congress, MWC, contagion fears led a roster of tech and telecom companies, many of them non-Chinese, to announce they will be steering clear of the event, scheduled to take place in Barcelona, February 24th to 27th. And that's a big one, obviously. And I think I'm going to see more and more of this. I'm scheduled to go to the PDAC, the Prospectors and Developers Association of Canada, which is the largest mining conference in the world, the end of this month, early March. And right now I know it's on. I don't know if it'll be canceled. I really don't. I kind of doubt it. But the point I'm making is that there's a lot of fear out there, and a lot of this is probably precautionary, and I'm not saying it's a bad thing. It probably is a good thing, especially until we get a better handle on it. And a lot of people, such as a real name, Chris Martenson, again, has a very good, balanced, objective view of what's really going on. And this thing is continuing to concern more and more people and take more and more lives and spread. So, caution is the watchword. Many of us look at some of the, let's say, more comprehensive indicators on economic activity on a macro picture, global picture. One, of course, is copper, which has just fallen almost straight down. Another is oil, and another is the Baltic Dry Index, which is basically a measurement of the amount of ocean-going freight. Headline reads here, Baltic Index edges up, but outlook's dim as virus hits shipments. The Baltic Exchange main sea freight index inched higher on Wednesday, helped by an uptick in rates for Panamax vessels, but sentiment remained negative as the coronavirus outbreak disrupted vessel shipments. The Baltic Index, which tracks rates of capesize Panamax and Supramax vessels that ferry dry bulk commodities, was up 3 points or 0.7%. The main index slid to a near four-year low of 411 on Monday. Global ship deliveries have been hit hard in China's struggle to get fully back to work as a result of the coronavirus outbreak. So we'll continue to watch this, but, I don't have to tell you or make a long video here. Everyone knows that there is a direct impact, particularly in China, which basically is the manufacturing capital of the world. For the most part, a lot of Walmarts are filled with goods from China. I don't know if it's 50%, 60%, or 20%. I think it's around the 50% level, but I'm not sure on that. Don't quote me. But I think it'll be a matter of not too long, meaning in the next couple of weeks even, that it will be shipments through China to the U.S. will be noticeable, and I think Walmart may be one of the first places it'll be noticed. Next up is from friend Christopher Bulin, who writes Technical Traders, and he does a great job. I probably don't post his stuff as often as I should on my blog. Shipping rates plunge, commodities and stocks may follow. I'm going to go through this briefly. I do suggest you get at least on this free list and read he writes weekly. An almost immediate reaction to coronavirus outbreak in China and through most of the world has sent shockwaves through the global markets, particularly seen in shipping and oil. The actions within China attempt to contain the virus spread, including shutting down entire cities and setting up mass quarantine. It estimates that as many as 8 million plus people were quarantined within the cities of China throughout the Chinese New Year. So he goes on to show shipping rates, which I just talked about a moment ago, and then he shows, a chart here showing the collapse and how quickly it took place, showing the infrastructure projects on the China's Silk and Belt Road, and then of course he's showing you the oil chart, which of course is probably the best, probably even better than the Baltic Dry Index as far as what's really going on. Energy moves everything, energy touches everything. And for the most part, that means oil. And if oil is off, then obviously economic activity is off. Pretty much a one-to-one correspondence. Not 100%, but darn near. So I suggest you read this article, take a look at it. Thank you, Chris, for your great work. As everyone knows that listens to these weekly perspectives, there's always some new people. So just let me reiterate briefly that I've been saying that the global economic system has been contracting for months now, and giving you article after article to prove that. And I've also talked over and over again about the upcoming food crisis. And of course, with this coronavirus, you can obviously see that could accelerate that. And also what has just come on board our screen recently, and that's this Locust Threat. So I want to talk about that briefly. This is from CBS News. Locusts threaten to rob millions in already vulnerable East Africa of food. From Johannesburg, Uganda scrambled to respond to the arrival of the biggest locust outbreak that parts of East Africa have seen in decades, while the United Nations warned Monday, quote, "We simply cannot afford another major shock," end quote. An emergency government meeting hours after the locusts were spotted inside Uganda on Sunday decided to deploy military forces to help with ground-based pesticide spraying. You can look it up. You can look up locust outbreak on one of the search engines and search for news, and you'll be able to see a lot that's going on. So a lot already between the swine flu that took part in China and the avian bird flu that's wiped out a bunch of chickens. And then, of course, the COVID-19 and the locusts. So a lot of problems, obviously, and a lot pertain to the food supply. And I don't want to be Dora Doomer. I do want to stay fair and balanced, but this is a fact. So act accordingly. Only you can decide what's best for you. But as I've said years ago, when things looked a little brighter than they do as I'm doing this weekly perspective, even at that time, I said having extra food is a zero-lose game. You just really can't lose in that. Even if the worst is you end up eating it or trading it or giving it away or giving it to a food bank or whatever if you don't use it. And actually, in some ways, it'll be a hedge against inflation because as the supply chain continues to break down more and more, certain items may be very difficult to obtain or almost impossible. And that may sound rather crazy now with what Americans take for granted, but mark my words, I think we're going to see that, and probably sooner than some people think. So I try to keep these under 15 minutes. I'm already at 10. So it's from my friend Marco Byrne over at Goldcore. Full disclosure, I have an account there, a small one, but one nonetheless. Well, small is relative, isn't it? Anyway, gold surges to all-time record highs in euros. So again, this is something, gold is a global market. Most people that listen to my podcasts are U.S. oriented or maybe Canadian, but in the Canadian dollar, Gold's at a high, or near all-time high. I'm pretty sure it's all-time or very near that. And in euros again. So it depends on what currency you're looking at, gold, really, because in some currencies, such as the euro, which we're going to talk about here in this moment, gold is doing much better than it is in U.S. terms. And in U.S. terms, it's acting stronger, of course. But gold prices surged to record high in euros today. He's writing this on Friday. Gold prices are now up over 7% in euros terms so far in 2020. So 7% gain in a month and a half. We're halfway through February. It's pretty interesting. Building on the 22.7% gain seen in euros in 2019. Gold is consolidating near 7-year highs in dollar terms as investors assess the risks to an already vulnerable, debt-saturated global economy. Mark, you do great work, great articles, nice charts. Enough said. And I'll speak a little about silver. This is from Barron's Magazine. Why silver prices are poised to rise even more this year. Silver has fared better than some of its metal peers against the backdrop of disease-threatened global economy, in part because of its dual role as both a precious and industrial metal. The monetary value of silver underpins the vast majority of its price, and if the metal had only industrial demand working for it, the price would be under $5 an ounce, says Gold Newsletter editor Brian London. Silver's precious side means it will outperform industrial metal in the months ahead. Well, I know Brian quite well. I speak at his conference almost every other year or so. I would argue that it wouldn't be $5 an ounce. It would be the cost of production, which is about where we are now. So if you had only industrial demand, it doesn't matter. The price of silver to get out of the ground is going to be it's a variable cost depending on the price of oil and the price of labor and what the restrictions are in any given jurisdiction. But the point is, it's not $5. It's more like 14 or 15. So, not to pick a fight with Brian, and I'm not sure, who knows if he was quoted correctly or not. I know from my past experience, especially the larger publications like the Wall Street Journal, some of those, they're the ones that seem to err the worst as far as quoting you correctly. So I'll just let that go. My point, I think you can hear it, but silver is certainly undervalued, as I did in the last couple of videos I did one with Greg Hunter, and that's been fairly well received. And this was after I did the interview with Greg. Of course, Greg wrote this to me, and the latest is called Fed Flooding the Market with Funny Money, David Morgan. And you can read that pretty quickly. I'll leave it up on the screen. This is the interview here on USA Watchdog, and it's worth a listen if you care to. It's up to you, obviously, but we did cover a lot of topics, primarily the economic impact of what's going on with this coronavirus situation. Also, we spent a lot of time on the repo market, and a lot of people haven't talked about what the foreign exchange rates could mean to this ongoing battle to keep the liquidity in the system, because the banks are breaking down with their trust of each other. So if you care to, also anyone that signs up from this using the code I gave Greg, which is Hunter, does get a slight discount, 10%, and also gets a $125 value. I will do a 15-minute one-on-one, and it'll be one of my staff consultations with anyone that signs up with that code. So that's it for this week. I'll be back with you next week. Hopefully we'll have a better handle on this virus situation. Hopefully it'll be curtailing somewhat or whatever, but again, I doubt it. I think it's got to run its course, and I think right now there's too many variables, too many unknowns, and too many new spots it's breaking out that it's probably going to continue escalating at least for some time. I'll leave it there. I'll be back with you next week. I do believe that we have one of the best opportunities to make money, and money is important, but certainly not the most important. I would say health and well-being is probably the most important for the human human condition. Nonetheless, I will continue on. Remember, there is nothing more powerful than the truth. Be kind to one another, especially understanding, tolerant. Keep your compassion. We are facing some very interesting times, and it's best for us to dig deep and maybe go that little extra mile with each other as things continue to be tenser and tenser in the total global scheme of things. So I'll leave it there. No more philosophy. I'll be back with you next week. Hello, I'm David Morgan, publisher of the Morgan Report, and as some of you may already know, the Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter. To-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You will understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in this sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.